Hello, for this tutorial number 2 I will recommend against certain types of investments and trading, beginning with day trading. I would encourage you not to become a day trader. I've known several people who were day traders, and the people whom I knew who tried day trading, they did lose a lot of money at it. There are people who will make videos or who will send you flyers and they will tell you how much money they made as day traders and how easy it is, and they'll show you records of how much money they made as day traders. But that is sort of like if Tiger Woods showed you how to play golf. If he showed you every swing that he makes, would you be able to play golf the way he does? No. Same with day trading. I heartily recommend not becoming a day trader. I recommend you not invest in partnerships when you are beginning your financial portfolio for one reason. Partnerships usually are pretty good businesses and they pay huge dividends, 15% quite often. If you want to go to the trouble of filling out a Schedule K income tax form, look that up, see what's involved, and also think about the fact that if you invest in a partnership and you make a profit in the partnership, including your dividends, whatever, you have to report that income tax to every state in the United States if you're a United States investor. And I assume that's true also of people in other countries. If you invest in a partnership in the United States, you would have to fill out a state income tax form for every state in which that partnership did business. It just is too much trouble, so I recommend against partnership investing when you're starting out. You can study them and see what you think about them. And if you find a partnership that does business only in one state and you want to go to the trouble of a Schedule K, be forewarned. I recommend not buying puts or selling calls, or buying calls or selling calls, selling puts, buying puts, whatever. Do not get involved in options trading when you are beginning. What happens with options trading, you are getting what is known as leverage. And an option means you have the right to buy something at a certain price for a certain period of time. You're buying, for example, suppose I knew that there was a person down the street who liked 1957 Chevrolets. He collected 1957 Chevrolets. He's got 20 1957 Chevrolets in his backyard. And I find out he's been paying $50,000 for these cars each. And then I happen to meet somebody who's got a 1957 Chevrolet and he's got it for sale for $35,000. Well, what I could do, I could say, hey, I'll give you $100. Hold that for me for 2 weeks, and I'll come back and buy it, or you can keep the $100. Now that's an option. And what would happen then, I would go to the person who collects the Chevrolets, and I would say, hey, I'll sell you a 1957 Chevrolet for $40,000. And for him, oh wow, yeah, sure. And so he would agree to buy it, then I'd go back and exercise my option, the $100 option to buy the car for $35,000, then I'd be spending $35,100 and selling the car for $40,000 and making the profit between those two numbers. Now that would be an option deal where I sell something before I buy it, and that's how some options work on the market. You can actually sell a stock before you buy it. If you think it's going down in price, you sell it first, then you buy it. And it gets very, very confusing. In most cases, all you lose, if you lose, is you lose the amount of money that you spent for the option. But in some cases, if you get really involved deeply in some of these things, especially with margin accounts, you can end up losing more than the cost of the actual underlying stock or issue, whatever it is. Anyway, Stay away from options. Stay away from margin accounts. A margin account is where you have an account, say you put $50,000 into an account to buy stocks, but the broker gives you a $100,000 floor plan. The broker allows you to buy $100,000 worth of stocks. He's loaning you $50,000. Now, if you happen to guess right and every stock goes up in value, boy, you've got leverage. You've done something good. But if it goes down in value, you lose, and you can lose a lot. Stay away from options, stay away from margin accounts, stay away from partnerships, and stay away from day trading. That's what I'd suggest staying away from. For your first investments, if you're going into the stock market, the best bets either are to study some stocks and buy a diverse amount of stocks. For example, you don't want to buy a bunch of fast food restaurants or a bunch of automobile manufacturers or a whole bunch of oil companies. You'd want to buy one fast food stock, one automobile manufacturer, one tire manufacturer perhaps, one high-tech company. So have a diverse holdings when you first go into the market. And the other possibility, buy a mutual fund, especially an exchange-traded fund. I will highly recommend studying exchange-traded funds when you first start out, because a lot of them do come with high diversity just built in. They own lots and lots of different companies. So you can buy one fund and own a lot of companies and have diversity without spending a lot of money. And in fact, I'll recommend one fund to look at. I have not looked at it yet today or in the last week or two, but IOO, it looks like the number 100. IOO, that's the top 100 world companies in one fund. You might want to look at that. If you think gold is going somewhere, look at GLD. That's a fund that invests in gold mining stocks and issues that are oriented toward gold. But if the gold market doesn't go anywhere, then that fund isn't going to go anywhere. There are a lot of different funds and a lot of different stocks to look at. And don't get a margin account. Don't play games. Don't think that you're always going to be right. You or I are not as good at playing basketball as the pros, and we're not as good at picking stocks as some of those people who happen to know something about the market that you or I might not have even knew existed. So invest safely when you're starting out. Pick some companies which have stocks which trade at least, when you're starting out, pick some stocks that trade 500,000 or more shares per day. And good luck.